relationships and how you work with people, right?
And I think Fresno's old school. Fresno is still really relationship based.
Yes.
Where you go to LA or the Bay Area and everything's online, and those
It's transactional.
those relationships
It's too high
don't
speed
matter
there
as much.
to right.
Yeah. So, well, I think the best way to build any business, honestly, is relationship based. Like, create long term relationships with people that you help, and that way, just showing value, being there. Just being in their life if you can, if they're wanting to, over a long period of time, and a lot of great things could come about that. I think.
And that's how you build that referral business, like our guest here today.
Yes.
Guest here today here on Heat Speakers.
We are back.
We have
Who we got?
Kurt Goetz here. Kurt Goetz, mortgage loan officer here in Fresno, with Nexa Mortgage, same brokers I'm with. This is actually the branch manager here.
Yep.
So I got to be on my best behavior. The boss is here.
The boss is in the house.
He's heard me in the office.
Yeah, I've heard him in the
There's no
office.
such thing as good behavior.
But we do have Kurt here. Years of experience here. That's how he built the business he has now. And we're going to get to learn a little bit more about that and get his perspective on this market that is driving everybody crazy.
It is.
Yeah.
Welcome, Kurt, man. Great to have you, man.
Thanks. Happy to be here.
Yeah. So
It's fun.
you've got a ton of experience in this business. I'm sure you could shed a lot of light on a lot of things happening in this market. What year did you start?
I've been doing this for 20 years now. So I got in kind of right at the worst time, right before the 06 crash. And
But you got to enjoy all the run up prior to that, right?
I got in kind of right at the end.
Oh, really?
Yeah, it was rough. The first couple years were a lot of work and a little bit of pay, and it just built on itself every single year. And eventually, after 20 years, we're not fighting for new business as hard as we used to, and the phone's ringing more, and it's all relationship based and customer service based, and it starts to pay off.
You're definitely the guy that needs to be on this podcast, and definitely someone I could use good tips from, and I'm sure Mark and just a lot of people out there, not even on real estate. Like this relates across all businesses in general, right? So I'm sure how you have retained your customer and clientele and your base. You can kind of fill us in on kind of little things you've done to keep all that business and how it has grown over time. So, man, this is going to be a fire episode, bro.
Not too many secrets, because then I will pass you. So don't give me too many secrets.
You will.
That's it,
no
though.
doubt. It's just a matter of time.
Yeah, and one of my favorite books before you go on is The Go-Giver, right? So, you guys read that book, Go-Giver?
I have. Yeah.
Great book, guys. Basically, the moral is the more you give in life in general, you're going to get like 5-10 times more back. But just giving, you're giving out the kindness in your heart. You're giving, whether it's information, whether it's whatever it is.
Without expectation.
Without expectation, right. Exactly. Things will just come back 10 times full. So I believe that, and it's that's why I believe in sharing whatever information and tips, to help someone else, because it is what it is, So
yeah,
that's just
sure.
a little thought.
Yeah, man. So Kurt. 20 years in the business. Your first couple of years were rough. What were those like, and how did you advance out of that rough stage for any of these loan officers that are just starting?
My experience, I feel like I'm a little, like I've had a harder go than some people. Some people come into the business and they know, they went to Fresno State and they know everybody and they have this big sphere of influence. And I got into it, and my aunt got me into the business, and I worked for her. She was awesome. And then I kind of went out on my own, and my first job outside of my aunt's company, they said, we've got a good book of business for you. We're going to have a whole bunch of accounts for you to call on, and we're in. And I showed up the first day, and they handed me a phone book and said, here you go, get to work.
Phone book.
Yep. What was her business?
She was New Era Financial. So her name was Dee Jenkins, and she's passed away since, but she was awesome, and she was OG. She taught me customer service, because there's a lot of things that you learn in this business, but the most important is customer service. And she was, no matter what, it was customer service first, second, third. No matter what, your clients are who you care about. Your clients are the number one priority. Not the realtors, not anybody else. Just it's all clients. And she had generations of people that came back to her, and I learned all that from her. And I now I have a couple clients that I've done grandkids for. So we've done 3 generations.
Wow.
3 generations, and that's
That'd be a
that's the
dream.
way
I would
do
love
it.
to do that.
We'll touch on that a little bit more too, because I'm in the office and I see, notaries in the office. I see, you got all these things, and people are coming in constantly, even regardless of what the market's like. So,
Yeah.
so go ahead. I'm sorry to interrupt you.
Yeah. So once I went out of there, I went to this other company, and they gave me this phone book and said, get to work, and
Cold calling.
it was terrible. I
Yeah.
mean, just, I've been to every bank in Fresno 3 or 4 times, didn't get any business out of it. I just kind of did it the hard way. And the hard way for me was you close a loan, you did a good job, you market to the realtors, both realtors, you market to the clients, all the clients' family, and you very, very slowly built that relationship based on customer service. And, I have buddies who've done this, and they come in and they know everybody, and they just hit the road, and just business is coming like crazy. And I'm like, man, that's the way that I wish I would have started. But I just did it slowly and slowly. And the first year that I ever had that was lower than the previous year was last year because of the rates going through the roof.
Got it.
So
Wow.
it's been a climb every single year.
Talk about the early years, like the first year. Like, talk about that grit, that grind. Like, what did you do your first year? Like, how much business did you do? And talk about a little bit how you gradually built your business and your client, clients up.
The first year was, for volume or something. We were probably, if we were lucky, we had 2 loans a month, kind of a thing. And like I said, the way that I built it was just marketing to the people that I closed loans with.
Yeah.
And that's
And what is that like a little bit more? Let's unpack a little bit of that. Give a little bit of nuggets out there. Like, what did you do to kind of like to market? Like, are you making phone calls? Are you
starts with a phone call to
Okay.
the agents and the borrowers when you close, and you always ask for new business. So at the end of that call, hey, let me know who you know that needs a good loan officer. And 9 times out of 10, the listing agent's already working with the lender. The buyer's agent is the ones that I really went after because I did a good job for them. So eventually, once you get enough buyer's agents, then you start having business come to you. And slowly, and we're talking over 10 years it took to get a good book of business going.
So it took about 10 years to really get things rolling.
Yeah.
See, and that's a good point because the average person who gets into this business or in business in general, they'll go for about a year. They're like, oh man, this is hard, or even less. And then they give up and they feel like, and then it just sadly discourage other people who want to get into business. Like, no, it doesn't work. It's not going to work. You're only going to do this. Most people, including myself, before I got into business, severely underestimate how much effort and how long it takes to really become,
Start to build some momentum.
Exactly. And to where things are just coming in and rolling, and then everything grows rapidly. But it takes a much longer than the average person thinks. You know what I mean?
Yeah.
And
especially for me, because I did it the slowest way possible. So it was.
But you know what? To interject there, I think, and I was fortunate when I came in. The rates were low, and I kind of came from that environment that you had said. I had a career for 10 years prior, so I had a sphere of influence. I knew a lot of people. I went to Fresno State.
Yeah.
So athletics and things like that. It just kind of rates were low. I was doing a ton of refi, and I was fortunate enough to come into this office and be surrounded by you guys, see your model, right? And I was just like, man, this guy, they're coming to him. Yeah, I don't want to be, in demand. I don't want to be on demand. I want to be in demand.
Sure.
And that is what Kurt was. He was in demand. They're coming to him, and I was like, man, you know what? I gotta do it that way somehow. And I remember you telling me one time, like, man, yeah, refi, they're there for you, but you better focus on that purchase, man. You better focus on that purchase business. Even though refis are there, you better focus on them realtors, man, because that's the longevity of your career. And now here we are. I'm glad I did that early on. I wasn't turning away refinances, but still, when I would work, it was the same thing. I was new, and I didn't come from a sales background. I wasn't really interested in cold calling a ton of people. Any deals I was doing purchase wise felt like an interview to me. Once I heard that was your model and that's how you started, I was like, you know what? I'm going to approach it like an interview. The buyer's agent is either going to continue to use me or not, and this is my chance to show them to. The listing agent is either going to use me in the future or not, and this is my opportunity to show them why. So it was always like an interview, and that's how you build that slow database. And now when rates are extremely high and the phone's not ringing for a lot of people, you stay top of mind for some of these realtors, and it
you
really helps.
you have to create value for your clients, for
Right.
your realtors, for any referral source that you get. And if you don't create value, they're not going to use you.
Yeah.
So if you show them what a good job you do, that's a really good start. But there's a lot of people in the business that they'll have a transaction with you and you did great, you did awesome, but they've been working with another lender for 10 years. So you're not going to get that business.
Right.
So that's why it's so hard to build through the realtor aspect of it for my business plan.
But that same agent may use you if their lender is not around, or they leave the business, or sometimes
You get your opportunities, right?
And then there's times where lender partners, they break up, for whatever reason.
Yeah.
They just they
And
split
you
ways,
wanna you want to be the first one they think
That
of when
lender
that
might have
happens.
done a bad deal out of like 100, and maybe that agent's like, you know what? Let me try someone else. And if you've done a great job, they'll go, hey, I'm going to go to Kurt. He was great.
Right.
So
Right.
you never know. It just, I think it's just about doing the best job and giving the best service on every deal, regardless of what's what. I think that's the best way to approach it. Like as much as you can in every deal that you're doing, give the best service, show the value, and making that the standard. If you do that on every deal and every transaction, you really can't lose. You can't lose because whether they use you or not, you gave your best. Now it's a good chance you could get that business.
And when you get doing this long enough and you've worked with enough realtors, when you get your pre-approval letter out and they see my name on it, they're like, oh, it's Kurt.
It's solid.
Kurt's
solid.
been around.
Yeah,
Kurt's been around
exactly.
the block.
Yeah.
Kurt's been through some things. Actually, let's talk about that. So you start 20 years ago. You started. First couple of years were rough. You had a business model you knew was going to take some time. Maybe you start gaining some momentum. 2008, 2009, 2010 happens. What was that like, man?
So I feel like I was probably in it. I didn't start getting busy probably until maybe it's been 10 years now. So the first 10 years were just scraping by. We're talking first 5 years with loans from parents and the whole 9 yards, trying to survive, and then started to build on itself, and then it built on itself and built on itself. And then once, I've gotten to the point where, for the most part, as long as I provide good service and follow up with the realtors, my realtor partners that I do work with, I don't have to go chase it as much, just because through the years you get that book of business, and you get that name, and you get the, everybody realizes what you're about and know that you're there to close loans, and that's kind of how it builds.
Right.
Yeah.
Right.
Good. Man.
So it was tough then during that recession
Oh yeah.
period. It was,
it was
ultra. It was just another layer on top of what was already difficult.
Oh yeah.
Where were you in your business at that point, like the 08, 09? Like you had a few years under your belt already. Did you feel, were you pretty confident? Were you, obviously you lasted, or did you go get another job at the time? Was it
I
ugly
stuck
or what?
with it, and I was just scrambling enough. I had real low bills, and I was just scrambling enough to stay afloat for the most part.
Right. Because
So-
not too different, too much different than today's market right now, with a lot of professionals, agents, and lenders leaving the business because, things have slowed up. Not as much transactions are happening. But those that have been building their business, I guess the right way and staying consistent, the ones that are still able to manage, I guess, to stay afloat, which I'm saying.
And I think when you have this low of inventory, every deal's tough. If you're writing offers trying to buy, it's tough to get your offer accepted. If you're out there trying to get listings, it's hard to get listings out there.
Or knows
it's
that
just
no
tough.
one's selling right now.
Yeah,
Sellers, get off the ground, get up and sell the house. No, just kidding. But no, it's a great time if you are a seller and you can contemplating. It's the best time right now. Reach out to your realtor because you're gonna have a ton of buyers. Probably you're gonna have quite a few buyers probably looking for your house.
Yeah,
So
depending on the
great
price
competition.
range, you're going to have
Yeah,
multiple offers.
exactly.
Offers
Right.
over asking, and you've got that power.
So you can get a really good price for your home right now if you're looking if selling is right for you.
Okay.
If it's right.
So shifting from your own personal business, but still talking about that housing collapse. We see a lot of that in the news now about how this is something similar, or how people should wait to buy, or how it's dumb to buy right now. Being in the industry, and not necessarily talking about your own personal production or anything like that, but just comparing the time frames here and comparing the economics. Do you see any similarities here between?
None. Zero.
None,
Zero.
right.
No.
Wow.
Anybody who says that there's going to be a market crash is just wrong. So what happened in the last market crash, 06, 08, they fixed the problem. So The reason that happened is because people who couldn't afford to buy houses were buying houses left and right. Once they got through that problem and they fixed that problem, now if you're buying a house, you have to afford it. There's just no other way to do it unless you're doing some goofy private money or something like that, where you're putting a bunch of money down. Every average guy absolutely can afford this property that they're buying. So what can happen? Massive job loss. Okay, well, we just went through COVID. We didn't have massive job loss because the people who were buying houses were still employed.
Essential, right?
Right. So they're all essential workers. So you get into that, and you've got essential workers that are buying houses. Okay, at the time, they can qualify for the mortgage. So what's going to create a crash? Housing prices dropping. Okay, we have low inventory. Housing prices are not happening. They're still going up. Okay, so that's not going to happen. Mortgage default. Well, if you're essential workers, your teachers and your firefighters and your law enforcement and all that stuff, everybody's got jobs.
Probably making even more.
They can still afford it.
Right.
Okay, what else could happen? Foreclosures. Well, everybody's got equity. Nobody's going to foreclose. If anything, they're going to sell. Right. So this big market crash.
And aren't lenders like working more with people, with owners too? Like if they do get into a default situation, they're extending, they're trying to work it out prior to foreclosing. It seems like a little bit more, a lot more, right?
Yeah, I think so. And really, I think I haven't checked the statistics, but I think our foreclosure rates are next to lowest they've ever been.
Yeah,
because everybody that has bought can afford.
Right.
Everybody that has bought has equity. Everybody that has bought is not losing their house. And the reason we have low inventory is because everybody that has bought, if they go and they upgrade their property or they move to a higher place, their mortgage is going to double. So everybody's sitting on the fence waiting for rates to drop so that they can do that.
So they can
Right. Yeah. So once rates drop,
right,
this market is going to take off. There's such a pent-up demand for housing that
it's going to be crazy.
It is going to be nuts. It's going to go back to COVID times where you've got 15 offers. We sold a house in the peak of COVID. We had 16 offers. Every single one was at least $20,000 over asking. We ended up selling it was $500,000 house. We sold it for $551 because our highest offer was $551. And we had no appraisal contingency, no loan contingency. They just didn't even care. And it's going to go back there. It's just a matter of when the rates drop. So, if we're high sixes, if it goes down to mid fives, it's going to take off.
Yeah.
Oh, yeah. It's gonna be crazy.
Yeah.
I think there's a rate that's gonna first. I would say high fives is gonna unlock, or low six is gonna unlock a lot of buyer demand, which we really don't need. We need inventory, right?
Yeah.
I don't know if that low six, high five is gonna be enough to unlock the sellers to sell their home, to upgrade or downsize. Now, I think once we get a little bit lower, that might maybe mid fives or lower.
My number in my brain, for some reason, I don't know why,
What do you
is
say?
5.5.
5.5.
That's going to unlock everyone.
Yep.
The sellers going, okay, this is good for me. I can sell mine, buy
And you
got
to realize some people are going from twos. My mortgages that we have several. They're all, I think our highest is 3.25.
Yeah.
But most of them are below 2. So you're gonna have an increase, but I had clients looking at a $600,000 house, and that buys them a $300,000 house now.
Yeah.
I mean, it's brutal.
Yeah, but also too, those sellers, even if it's 5.5 or high fives, I mean, once they sell their house, finally, because the rates they'll have a huge down payment to where now their mortgage payments could be less than what they were paying, right?
Because if they funnel it all into the next one.
Yeah, they're going to put down proceeds from, that down payment from the sale.
Yep.
And they're going to get a ton for the sale because it's a lot of demand. So they'll get a good price. They can use a lot of that, put that down to their next home. Mm-hmm. Now their payment's going to be probably lower than they were paying, and now they're happily ever after.
And a good loan officer is going to say, oh, you got $150 to move from the previous house to this one. Yeah, put a good chunk down. But if we're at 5.5 and that's what rates are, take $10,000 and buy that down to a 4 even, 4.5. With a permanent buy down, and use those funds to buy the rate down, and use majority of those funds.
Clean up your credit card debt. Clean up whatever else you can.
Right.
Put the rest down.
That's why you guys go to these guys. These are the men.
That's how you do it. That is how you do it. And to be honest, the ones that are in 2s and 3s, majority of those did not buy them. They didn't buy that property at a 2 and 3. They refied into it, meaning that they owned it at a 4 or a 5.
Sure.
And when it came down that low, and I don't know that it ever will come down that low again.
Yeah.
But the real winners were already homeowners.
They already
at
bought.
5. They just refied into the 2 and 3. They weren't in the market shopping at 2 and 3 because good luck. If you buy the home now, the winners are when the rates drop. Those are the ones.
Psychology of people in general is just crazy, and I've seen it. I've been in this is my 6th year, but I've seen it, and it's crazy how it works. Because I've even heard over years, you got people like, oh, it's not a good time to buy. Like I started 2017, right? There were people that time like, man, you better not buy a house. It's bad, man. It's too high. Market's gonna crash. We're talking 2017. How many years before the pandemic, right?
Right.
But look at us now, 2023. That person who bought 2017 or even all the way up until 21 probably is doing well. Very, very well right now with their value. So it's just psychology. It's psychologically, it's crazy how it
is. I have a client, and he was in contract for a house. It was $560,000. He and the seller disagreed about $2,500, and he backed out. And this
$2,500.
Yeah, $2,500 bucks, and he backed out. Much to me saying, no, don't do it. That's trust me. This is you want this property. It's $2,500 bucks. And my brain says anything $5,000 in a real estate transaction is nothing.
Nothing.
It's like nothing. So don't get hung up on that little stuff. So this guy, he backed out of the purchase, and it was $500,000 or $600,000. That house sold a month ago for $1 million.
That's
crazy.
And he meanwhile years ago he's worried about 2,500 when he could have had maybe $500,000 profit.
That's
wild.
That's your equity. Real estate's the most solid investment that I can think of.
And it's hard to and I get it, it's a scary thing. You got a lot of people, family, friends, the news. We're fighting. They're fighting a lot of negativity, right? A lot of things against them. Like
media's out there to create doom and gloom.
Yeah.
But a lot of people fall into that. Though.
Yeah, totally. And it's just flat wrong, but it makes people watch. So, even no matter how wrong it is, if you get ratings, they don't care.
And we wonder why there's like a 1% or 3% of people that are wealthy in the world, because
everybody else is listening to that.
Most of us or most people, I used to be in that camp too, but yeah, will listen to family, friends, news, and it's not a good time to listen to the doom and gloom. So they don't do anything and miss so much opportunity.
Oh yeah.
To win that purchase, if you didn't listen to anyone, if you made that purchase 5 years down the line, 10 years down the line, you're gonna come out way on top.
Yeah.
But again, I'm not pushing. You got to buy when it's right. If you really can't afford it, or then don't. But if it's a time where and if you plan on being in a home at least more than 5-6 years, I would say go ahead. That's 5 to 10 years. That's enough time. If something did happen with the economy, it could recover by then. I would say.
Yeah, and the biggest demographic that's going to get hurt when the rates go down is going to be first-time home buyers, because they're not going to have a shot at it.
Yeah.
So what I'm trying to tell everybody, and you kind of sound like a used car salesman,
Yeah,
like, hey, buy now while the rate's high. Take advantage of the high rates. I've said that to 100 clients, maybe 10% listen to me, but it's really true.
Yeah.
Buy now, suck up the higher payment for 12 months. Everybody's expecting and forecasting that rates are going to drop. I think we're at the peak now, next couple months, maybe. And then in a year, when you get that refi under your belt, there's two things that'll happen. Your payment's going to go down, and you won't be buying when the market is rabid.
Right.
And you won't be buying that house that's $400,000 a day is going to be $450 in a year, or less, who knows. But it's now is the time, especially if you're a first-time home buyer.
Yeah.
If you're already in the market, you've got both sides of it. So you go with the ebb and flow. If you're not in the market, you just got to get in.
Yeah.
You just have to. Even if you're tight for a couple years. When I bought my first house, I could barely afford it. I scraped by, and it worked out great. Nowadays, you're still doing the same thing. The inflation is crazy. Everything costs a lot. You're still qualifying with the same ratios for the most part. You're still scraping by, surviving for a couple years. You get job raises. You get stuff that happens. And you get the write-offs, you get all the things that are advantageous for owning a home, and stick with it.
Yeah,
sure.
Because we've got several properties, and the amount of equity that we have in those properties is just staggering. The longer you have them, the more it is, and it's just it's just a nest egg. We bought a house in Shaver. When was that? It was probably 4 years ago, and we bought it for $400,000, and we just had somebody offer us $950.
Oh, wow.
And it's.
But it's how much is it? Not how much, but it's cash flowing every single month.
Oh yeah.
Yeah.
It's Airbnb, and we're paying taxes on income after writing everything off.
So there's no urgency to sell.
No,
you realize that you have the appreciation.
Right.
Plus you're making money monthly, and you get tax write-offs.
Yep.
It's just there's
It's a
so many
big-
ways
it's a
to make
win-win,
money in real
right?
estate. It's just very, very intimidating to jump in. Like you said, first-time home buyers, when everyone tells them, okay, now it's time to buy, that's the same story that everybody's being told. So
Sure.
unfortunately, now it's gonna be tough. Now it's
only
gonna be tough for you to buy.
only the few that take advantage of that
That's right.
and
Take
sacrifice
advantage of the high
it
rate. That's a
will
good way to
win
put
and,
it.
and come
I mean,
on top.
really-
We'll come out on top.
Yeah, because there's so many people on the fence that all that group that's your competition. If you're buying a house, that's all they're not there.
They're not there.
Yep, investors. There's a lot of investors that are holding off. And those guys are the guys that have the right to hold off and wait, because once they get back in, they'll bully the market because they have cash. No big deal. They don't care.
They don't care about spending 25, 30 grand over.
Right.
They're gonna make more than that in 2 years and pick up a property that gains more. It just yeah. It's crazy, man.
It is.
It's crazy. and I've kind of run into this in the past year because, like I said, I haven't been doing this for too long. But in the past year, I felt more like a car salesman than ever in the 2 years prior to that.
Yeah.
Like
Not to say anything bad about cars.
Yeah, right. It just there's that negative connotation that
For sure.
oh, you're just trying to make a sale.
Right.
When and fortunately for me, a lot of my network, my sphere of influence, a lot of the law enforcement families I still help, I'm able to tell them, dude, I was telling you this when I was working next to you. So this is not new for me to tell you to buy real estate. So this is not new.
Right.
And they're like, you know what? You were saying that. So it's not just, but to, so it's not just like commission breath. You know what I mean? But to new people, that's how it comes off. It's like, you got to buy now. And I'm like,
what they don't understand is we do this for a living. We are in this every day in the trenches. We are the experts. We know what we're talking about, And when you have a certain connotation of that used car salesman vibe, people think you're in it for a sale. I don't give a shit about a sale.
Yeah.
Right.
One sale is nothing. I care about you. I care about your family.
Right.
I care about your wealth. I care about starting this journey. If you're a first-time home buyer of home ownership, that's the
Yeah.
most important thing there is.
Exactly.
Because if you're paying rent, you're paying somebody else's mortgage. You might as well pay your own.
Might as well. And why would we steer someone wrong when it's going to come back to us tenfold? Like, reputation is everything, So it's just like, of course, we're looking in people's best interest, making sure they're getting, the best thing for them, for themselves. So, yeah, man. Sweet.
all right.
I had one question real quick,
Go ahead.
Kurt. Where do you see rates landing the end of the year? Like, where do you feel we should be
That's the
looking
$1 million
like? I know,
question.
right?
My crystal ball's been in the shop for a long time. So I think we're at the peak right now. I think we are there. And we may have another Fed rate hike, which may bump rates up a little bit. But I feel, and I could be wrong, but I feel within a month or two they're going to start creeping down. And it's not going to be fast.
I
But,
feel that too.
At the end of the year, if we're high fives, low sixes, somewhere in that range, I'd be pretty happy with that.
Yeah. I think that's very realistic.
Who knows?
Yeah.
Depends on what the Fed wants to do and how they want to skew reports and keep we keep having really good reports, and then they come out and they read them wrong, or they don't look at the whole picture, and they're like, no, we got to keep raising, and it just doesn't make sense.
Inflation is coming down. We got we get another CPI report before the next Fed increase, or before we find out what the Fed's going to do. So that's good. I got a feeling, what CPI is, were we 4.9, 4.8, or 4.9? So yeah, 4.9 I think was the last reading. So I think, we may be in the mid fours as far as headline CPI next reading, and we should start seeing things happen, I would say,
it's got to be
then the
close.
Markets to follow, and
It's
then
got to be close. And what, like, once again, what I'm telling people is take advantage of it now, because once you get over that hump and everybody jumps off the fence, it's just going to go nuts.
Yeah, very true. Very true. Yeah.
And when it does, Kurt, because I know you've had a couple of these years where it does go nuts, where rates are extremely low, 2s and 3s. I don't even remember you leaving the office at all. I remember you being in there constantly on the phone.
Yeah.
It was hard to say hi to you at that time. So when this happens, just for loan officers, especially with a lot of experience, what does that work-life balance look like for you? Is there none at that point?
It's forced. It's forced. I mean, you have to force it. You can't work, 12-hour days. We work.
What's your schedule look like anyway? Just average schedule daily, like wake up.
So I'm working when I wake up, and that's 7 o'clock. I go through my emails and I start responding. Get into the office after I drop my daughter off at school, which is around 8:15. Pick her up at 3, go home, go back to work at the home office, and usually my phone starts ringing around 3, and it'll stop 6, maybe 7. So we're working a lot right now.
You're working around the clock a little.
Pretty much. I mean, it's a lot, whether it's emails or text messages or sending out approval letters or
something,
doing whatever. It's a lot of hours, and it's a good thing because I mean we're busy right now. We're closing loans, so I'd much rather be busy and have a tough work-life balance. I make sure that I had a rough week because it's month end and it's been a drain this week. So I went to the lake yesterday and blew off a little steam. Got off work at 4.
Oh, a little
big deal.
a little early, huh?
Deal,
Just a little bit.
Yep, just a little bit, and then back at it at 7 this morning. But you gotta. I try to work as little as possible on the weekends, so I don't do as much on the computer, but I always answer my phone because people are buying houses on the weekends. So you gotta answer your phones on the weekends. You gotta send out approval letters on the weekends. But other than that, it's way less work.
Right, you're not in there running through files. You're not, doing pre-approvals, things like that.
I mean, pre-approvals we send out. It seems like 3 or 4 a weekend, which is great.
Yeah.
But the work-life balance is you gotta make time for it, or you're gonna burn out.
Right.
Sure.
Right.
Go ahead.
Your counterpart, better half, some would say,
the Liz.
Also in the industry. Shout out to Liz Doyle, notary here in Fresno, California, top notch.
Yeah.
Man, she knows more about those docs than I do.
we do.
It's crazy.
Yeah.
But yeah, I see her too on that same. I mean, you guys are zooming.
Yeah.
So
She's
wife's in the
literally-
business too.
Literally running.
Yeah, she is.
Wow.
I don't know how she does it with heels, but she is gone.
Right.
She is gone.
Yep. She's all over it.
Is that something you guys set up, or just kind of naturally happen that way, or just being in the industry, you guys kind of understand?
Being in the industry, we both understand the schedule, and you got to roll with the punches.
Yeah.
She's got 2 signings on Sunday, and we're gonna do those 2 signings. I'll go to the second one, and then we'll head off to the lake and go play.
Nice.
So we work hard, so we have to play hard. It's not. I don't get a sense of relaxation on a weekend unless I'm doing something for me.
Sure.
So sitting at the house and watching golf isn't that. I gotta go ride a dirt bike. I gotta go get on the lake. I gotta go do something that really can get some R&R.
Yeah.
Because
Sure.
Just sitting around the house tinkering and doing chores, that doesn't cut it.
Right. Yeah.
So we try. But yeah, Liz is in my opinion, I'm biased of course, but I think she's the best in the business, and she's been my notary for
Well, you really have no choice now, right?
Gotta be 12 years. She's been my
Wow.
notary, and so she's the best closer that I've ever worked with. And my philosophy is work with the best people in the industry, no matter who it is. Work with the best. So from whether that's your escrow officer that you open refis with, or listings with, or whatever you've got, to that's the very start. And your closer is the last person that touches your clients, and that's Liz. And if you're not picking the best in the business, or you're letting somebody else choose that person, then to me that's a mistake.
God, yeah, that's very true.
So, because it's
a
all
reflection
a
of you.
reflection on you.
Yeah,
Exactly.
it is. Yeah, that's
Yeah.
your team. You
Yep,
know,
that's right.
And all the client knows is okay. This is who they sent me to, and
Yeah.
you got to give them the best. You want them to have the best service, the
And
best
you
experience.
want somebody that's knowledgeable. You want somebody that's fast. You want somebody that doesn't waste your client's time and that doesn't flake or do anything goofy. So yeah, Liz is. I've been drinking the Liz Kool-Aid for a lot of years. We've just recently been together for a while, but
Awesome.
Yeah, she's great.
Good for you, man. Good for you. Let me ask you something. Would you is there like any maybe 1 or 2 little tips you would throw at like some struggling? There's a lot of struggling lenders, a lot of agents too, but anybody struggling in this market, any couple things you'd recommend them to get?
Number one thing is answer your phone. It's number 1. That's number 2, and that's number 3. Answer your phone.
Answer your phone. Good.
Yes, that's number 1.
Amen.
Communication is what will build you in this business more than anything. So, we have a lot of communication with the people when we're in a transaction, constant. You got to always be in contact. You got to always tell everybody what's going on. If you're having tough times with a file, everybody in lending has tough times with a file, especially now. DU has tightened their belts, and we've got struggles. So I try to communicate that to a lender or to a realtor and say, hey, we're having trouble with this. We're working on solutions. Give me some time, Or a lot of times you won't tell them about the struggles that you're having. You'll try to fix it first and then contact them. But if they're calling you to figure out what's going on, you got to open up. You got to tell them what's going on. And if you don't answer your phone, which I hear a ton, when there's trouble in a transaction and you don't answer your phone, that's when you're in trouble. And that's what people remember.
Yeah.
There's a lot of top agents in town that have a hit list, a blacklist, that they won't work with these people. If this person's name's on this on this approval letter, I'm not accepting that offer. If there's a lot of that happens, and it all goes back to customer service.
Right. And I guess I'll speak for the realtors on this right here. Yeah, we appreciate any lender that just keeps us in the loop and communicates. Yeah. Good, bad, to ugly, doesn't really matter as long as we know what's going on. And then we could that way we could figure out a solution to work through it, right? But, like you said, there are some lenders that'll just keep you kind of in the dark. And with that, you have nothing to report to your clients, which makes you look bad, makes your lender look bad.
If you recommended that lender, once again, it's a reflection on you.
So communication is key, lenders. Whether it's good, bad, or ugly, it doesn't matter. Just talk to the agent so we can work together and try to work through it.
Right. Yeah, that's something I learned early on in my life, previous career. I had a couple sergeants that would just nonstop whenever it came to report writing or incidents. Bad news does not get better with time, So, it's really that simple. You just got a denial on a loan. Try to work through. It'd be better to hey, Rich, we had this come up, but we already found a solution.
Right.
Just want to keep you in the loop. We're going to be switching over from conventional to FHA, whatever it is. But you find the solution, or if you can't, waiting it out 14 days,
right?
It's not going to make it any better. Bad news
without
is not going to get better
without any communication on the other side.
Right.
So everybody else is they have no idea what's going on. They're thinking they're always thinking the worst. Like okay,
if you have a dead deal and you have a solution, or you have a problem that you don't have a solution to, get on it as fast as you can, because then the listing agent can get it back on the market. The buyer can either fix their problems or keep looking or lower their purchase price or whatever it's got to be. But yeah, you can't drag your feet at all.
Yeah.
Right.
You got
No.
I was going to ask you real quick. So you built your business up, agents. How did you get other like just regular clients outside of agents, like just people coming to you? Were you on the phone?
All based. No, I've never done cold calls. I've never cold called clients. I've never cold called realtors. It all just naturally happened with referrals from clients
over time. Got it.
And that's why it was so slow to build. I didn't have the law enforcement background to, that's huge. I didn't have anything. I didn't go to school here. I didn't grow up here. I just, I was a Madera boy, and I was in the welding business and, got out of it and got into lending and just did it the hard way. So
that's why I've always felt there's no failure. Failure only happens when you stop pursuing something, right? Because even though it might take 5, 10, 15 years, if you stay consistent and stay doing it every day and giving your best, the longer you're going to get to your goals, you're going to reach success. You just got to stay in the game, really, as long as you can, for a long period of time. Yeah. Kurt's situation, and within that 10 years, I'm sure you've had many successes within that 10 years. Not only did your business grow, I'm sure you as a person, just the skills you've learned, just your development as a person, business-wise has developed. You made some good money within that 10 years, I'm sure, time to time. So it's like really the journey, I guess, right? And then,
this business is hard.
Yeah.
There's a lot to learn because all your logic is gone. Logic is not what gets you here. Taking your real estate license, none of that is anything you use on a daily basis. Lending, you take your NMLS test, none of it is anything you use on a daily basis. So learning to answer the why is the underwriter asking for this? That's the hard part, because it doesn't make sense.
Right.
I've got a great borrower. He's got good credit. Why is this not approving? What is the problem? And lately, because the powers that be at Fannie Mae and Freddie Mac have tightened their belts, we don't know the answer. So we just fight through it and figure it out.
Yeah.
Yeah, I had one today, a VA borrower. We figured out what it was. VA borrower, he had some late payments on an auto, and that's why VA wouldn't take it. And so we switched it over to FHA. We've got a solution, and we're good to go. But you know, you got to figure out why, and that's tough. So,
Yeah.
you know, business is tough.
So learning
The
every
longer
day.
you're in it, the more you'll learn, and the longer you're in it, the better you'll do, and
Right.
the more you understand it.
Yeah.
That's
More solutions you'll have.
right.
Yeah. Yeah, that all matches or links in pretty good to the motivational quote I have here, which we'll get to pretty soon since we're gonna wrap this up. But hey, one of these off-topic questions that we always ask. It's not gonna catch you off guard because I know you.
Uh-oh.
I know you.
gotta
I
step
know
out
you.
real quick. I'll be right back.
Go
I'll
ahead.
be right back.
And I know you. But something we always ask our guests here is top 3 hip hop artists, dead or alive. Who would they be? We ask everybody, and we don't ask them until they're on here.
Okay.
Dead or alive?
All right. Biggie's got to be number 1.
Okay, all right.
Tupac's number 2.
Okay.
God, who's number 3?
3 is always hard.
Yeah.
3 is always hard.
God, yeah, because I listen to a lot of that stuff.
I know you do. Yeah, yeah.
I don't know. I don't know who number 3 is.
Number 3's tough.
I
Huh?
don't know.
Yeah, no. So
Yeah.
we always do that. Rich and I are always we listen to a lot of music, a lot of same music, same as you, man.
Yeah.
You know, so I hear what you listen to in the office too.
Yeah,
so.
I have my mood music. I'll listen to Megadeth one day. I'll listen to Cardi B. I'll listen to Tupac. I'll listen
do
to,
it all.
I'll listen to Eric Church, country.
Yeah,
And you
yeah.
never know what's going to be on when you come in.
Right. Yeah, no. So yeah, that's something we always ask here, just to kind of lighten the mood
funny.
before we get out of here.
I like it.
But your overall perspective on this market going forward seems to be pretty positive.
For sure.
Yeah, I would
we just,
agree.
We just need a little bit of a break in rates. We need a little bit of a break in the market and the media. We need this administration to do what their job is for once, maybe.
Yeah.
We need the Fed to read the full reports, and we're close. We're
Yeah.
close to the top. I really am confident that we're at the top of the rates, which means once they start dropping, everything will start to loosen up.
You all right?
We have such a pent-up demand for housing.
Right.
There's a ton of people that need homes, and it's coming.
Yeah. You think these new home builders are going to continue to build at the pace that they are, or they're going to speed it up?
Once the rates drop a little, it'll speed up again.
It'll speed up again.
Yeah.
Any idea of when you're going to become a preferred lender? Are you already preferred lender for one of these builders? You should be.
I know.
You know way too much about way too much. You should be. You really should be.
Those years of blood, sweat, and tears.
Yeah.
Teach you a thing or two.
Yeah.
I'd like to. I've just never really gotten into it.
No? Okay.
And we've done some work with, pretty much every builder in town, but they've got a lock on
Yeah,
that.
a lot of them do.
That builder credit. That's a big thing. So.
Do you often read these loan estimates and kind of give your clients a heads up on whether or not they're getting a good deal or not if they do decide to do their in-house lending?
Yeah, the golden rule, I guess, is when I compete with a builder, I usually lose, but we go down swinging, and if they have a seller credit, the seller credit or the lender credit or the builder credit is what I'm trying to say. The builder credit is the one that makes it so the client has to stick with the builder.
Right.
So their rates are higher, we know that, but their fees are higher, we know that, but that cash is what's king. You get 3% credit. That's a lot of money that's not coming out of your pocket. So
Absolutely.
even if your rate's a little higher, even if your fees are a little higher, it's less money out of your pocket. So it's hard to compete with.
Yeah, definitely. It hits these first-time home buyers right where they want it, and that's keeping more money on them. And they like that. So, all right. I don't know where Rich stepped off to. I think he had to use the facilities or something.
Take a call.
Yeah. But let's wrap it up here. I got a motivational speech that we normally end this with, man.
Cool.
So thank you for coming on here, Kurt.
It's a pleasure.
And it kind of ties in exactly with what you guys were saying here. And this quote is, if you're not ready to fail, then you're not ready to succeed. And similar to what you were just talking about earlier, how you even got into business. You took a business model and you kept going at it. I'm sure it felt like you might have been failing for a couple of years, but I look at you now and you're building your team out and you got multiple people underneath you working. And man, I'm striving to get there too, man. So
just stick with it. It's all it takes.
That's it.
Yeah, and you've got a jump start because you've got the sphere. that I didn't have. So
It was nice. It was nice with the low rates,
which is-
but building that purchase business has been a lot of fun.
Yeah.
I'll tell you that much, and I'm glad I was turned on to that and not just advised to just go get all the refis I could and then end up with my hands empty when this market
That's
turned.
right.